If you think Texas is still cheap, you are about to lose everything. Because the Texas dream was real. No state income tax, more space, a bigger house, a fresh start. So people moved, they bought, they signed, they celebrated. And then the letters arrived. Not welcome letters, escrow letters. The kind that don't ask permission, they just deliver the new number. Your monthly payment is changing, effective immediately. This story is not about vibes, it's about math. And in early 2026, the math is turning Texas homeownership into a pressure trap. Here's what most new buyers don't understand until it's too late. In many parts of the country, the pain is obvious. Income taxes, high rent, high sticker prices. In Texas, the pain is hidden inside the mortgage payment. Because the real cost doesn't stop at your interest rate. It lives in two time bombs, property taxes and homeowners insurance. First, property taxes. Most homeowners don't pay Texas property taxes in one dramatic annual check. They pay through escrow, quietly, monthly, bundled into the mortgage payment. That sounds convenient until the escrow analysis hits. That's when the lender recalculates what you actually owe for taxes and insurance. And if the county reassessed your home higher, the monthly payment jumps overnight. New homeowners are opening letters and seeing the same message. Your payment is going up by $400 to $800 a month. Not because you refinanced, not because you upgraded, not because you chose anything, because the numbers changed underneath you. Texas property taxes aren't a side cost. They can be the cost. A recent estimate puts the average Texas property tax rate around 1.74% of assessed value. At that rate, a $400,000 home could mean about $6,960 per year in property taxes, around $580 a month, again, just the property tax portion of the housing bill. Now picture what happens when your home's assessed value jumps, or when exemptions aren't applied the way you expected, or when your escrow account comes up short and the lender adds a catch-up payment on top. That's the escrow shock. And it doesn't feel like a policy debate. It feels like a personal emergency. Because most families don't have an extra $500 hiding in the budget. Not in 2026, not with groceries, car insurance, and interest rates already squeezing everyone. And then comes the second hit, insurance. Texas isn't just hot, it's hail, it's wind, it's flood risk, it's hurricanes, it's repeated disasters and expensive rebuilds. And insurers price that risk into your premium. A Texas Tribune report cited an S&P Global analysis that found Texas homeowners insurance rates had skyrocketed about 22% since the beginning of 2023. Another Texas Tribune report said homeowners insurance rates climbed nearly 19% in 2024 after rising more than 21% the year before, citing the Texas Department of Insurance. Houston area reporting has also cited Insurify estimates putting the average Texas home insurance cost around $6,000 at the end of 2024, with projections of roughly a 9% rise by the end of 2025. Even if your mortgage rate never changes, your total payment can still rise because escrow absorbs insurance increases the same way it absorbs tax increases. That's the part that breaks people. Your fixed payment isn't truly fixed, not when taxes and insurance move like a second interest rate you don't control. And this is where the Texas dream flips. Texas didn't delete the cost of running a state. It shifted the bill onto property and onto homeowners. So the promise becomes a paradox. You moved for low taxes, and then you discover you're paying a housing tax every month. You moved for affordability, and then the payment climbs until it competes with places you thought were untouchable. And once you feel the squeeze, your instinct is simple. Sell, get out, reset. That's when the trap tightens, because selling isn't free. Selling is expensive. Agent commissions, closing costs, repairs, concessions, time on the market, price cuts. In a rising market, appreciation covers your exit. In a flat market, appreciation disappears and the exit bill stays. That's how buyers who purchase near the top get stuck. You can't sell without losing money. You can't refinance without paying a higher rate. You can't rent it out and magically cover a payment inflated by taxes and insurance. So you stay. Not because you love it, because you're pinned. And when enough households get pinned, the risk spreads beyond individual homes. Because real estate doesn't just depend on buyers, it depends on jobs. The housing market is oxygenated by payroll, and payroll depends on corporate confidence. When the cost of living rises, when insurance becomes unstable, when taxes are unpredictable, companies notice, employees complain, recruiting gets harder, retention gets more expensive. And in a world where companies can choose where to expand, uncertainty is poison. So here's the uncomfortable question that hangs over Texas in 2026. If the housing payment is no longer cheap, what happens to the job story next? Now zoom out even further. This is also why homeowners get angry fast, not because they hate paying bills, but because they feel blindsided. They bought a number, they planned around a number, they budgeted around a number. Then the number moved. And by the time the political system starts promising fixes, the damage is already personal. Because a future reform doesn't pay this month's shortage. It doesn't undo last year's reassessment. It doesn't rewind the renewal notice. It doesn't refund the stress. For families already on the edge, timing is everything. And in 2026, the timing is cruel. So if you're thinking about moving to Texas right now, hear this like a warning siren. Do not shop by listing price. Shop by the full monthly payment. Demand the property tax history. Assume the assessment can rise. Assume the escrow can be recalculated. Assume the insurance premium can jump. And if the deal only works in the best-case scenario, it doesn't work. Because the Texas real estate trap isn't a single catastrophe. It's a slow, invisible escalation. One letter, one reassessment, one renewal, one small increase until your dream house becomes a monthly emergency. Texas isn't automatically cheap. Texas is complicated. And in 2026, complicated can destroy your finances.